When you first open a high yield savings account, you might not know what to expect. But over the last few years, I've learned these 3 important lessons that a lot of people don't talk about. So I'm going to share them with you in this video today, so that after this, you're more prepared than I was a few years ago to sign up and use a high yield savings account. I'll also share a bonus lesson at the end of the video. If you've been living under a rock and you don't know what a high yield savings account is, then it's basically like a regular savings account, but it pays you a lot more interest, hence the high yield. Most of them are FDIC insured for up to $250,000, and a lot of them don't have minimum balance requirements or monthly fees. The ones I recommend will earn you 4 to 5% every year, while traditional banks like Chase, Bank of America, and Wells Fargo only give 0.01%, which is basically nothing. Meaning if you hold $10,000 in a traditional savings account, you'll get $1 at the end of the year. But with a high yield savings account, you'll get $400 to $500 at the end of the year. The banks offering high yield savings accounts are able to pay you a lot more interest because a lot of them don't have physical locations. So instead of paying to maintain all those locations, they just give you the money through the higher interest. This extra money can go towards paying down debt, paying for a vacation, helping to pay for a car or home. And what if you had more money? What if you had $100,000, for example? Then a traditional savings account will give you $10 at the end of the year, while a high yield savings account will give you $4,000 to $5,000 at the end of the year. That is a huge difference. That is 400 to 500 times more through a high yield savings account. 400 to 500 times. Lesson number 1 will be around taxes on the interest earned in your high yield savings account. Chances are, if you have a high yield savings account, you will get a 1099 INT form, which shows how much interest you've earned. Normally, you'll get this form if you earn over $10 in interest, and a traditional savings account that offers 0.01% interest from Chase, Wells Fargo, or Bank of America normally doesn't exceed that amount, so you probably never got one from them. But in a high yield savings account, you're probably earning way more than $10, so you'll get this form. So yes, you'll have to pay taxes on that interest earned in the high yield savings account. But listen, it's not a bad thing. You earned money, which is why you're going to pay some taxes on it. That's better than not having earned anything at all and owing 0 taxes. Even after taxes on the high yield savings account, at least you're still going to have extra money in your pocket that you really didn't have to do anything for but deposit it. Taxes are a part of life. Taxes are a part of building wealth. So just be prepared to pay taxes on that interest that you're earning every month in your high yield savings account. Maybe even open another high yield savings account and put the taxes you're going to owe in that account, which leads me to lesson 2, which is that you don't have to sign up for just one high yield savings account. You can have multiple accounts. If you're seeing offers from different banks, different companies, then you can sign up for multiple accounts and take advantage of all those perks. And that way you'll also be able to try a bunch of different accounts and see what you really like. So don't feel like you're just tied to one savings account. This is a strategy that's used across credit cards and across checking accounts all the time, right? People will sign up and they'll get that bonus. They'll get that $200, $300, $400 sign up bonus, and then they'll stop using it if they don't like the account. You can do the same thing with a high yield savings account. Just make sure that you pay attention to the requirements to get that bonus payout. They tend to be very specific, and you don't want to miss out on a small detail that'll prevent you from getting the bonus. All of my recommended accounts will be linked below so you can take advantage of some of these bonuses. I read a stat the other day that only 21% of people have a high yield savings account. How crazy is that? This means that most people are just leaving free money on the table by not having a high yield savings account, right? Because they're just so used to these traditional savings accounts. They're so used to the marketing of Chase, Bank of America, and Wells Fargo that they completely disregard some of these better accounts. But luckily, you're not that person because you've already opened an account or you're about to, which is why you're watching this video. Lesson 3, don't expect the interest or the yield that you're getting on that high yield savings account to stay the same. One thing that's certain in life besides taxes is change, and it's not any different with a high yield savings account. The rate that you see being advertised will not be the same a year from now or even a few months from now. So don't spend the money in your HYSA like it's normal, consistent income. The 4 or 5, almost 6% APYs that you're seeing today will eventually come down. So don't make any important financial decisions based on the interest that you're earning in the account, because when that interest rate eventually changes, you might be in trouble. This leads me into my bonus lesson, which is that high yield savings accounts are not the best way to grow your wealth. Once you have your emergency fund or you have enough money saved for your short-term goals, such as a car or a down payment for a home, then you want to invest because you will make a much higher return doing that. Just by investing in S&P 500 index funds like VOO, SPY, and IVV, you can get an average return of 10% every single year, which is a lot more than that 4 to 5% you're going to earn from a high yield savings account. And if you invest in individual companies like Nvidia or Apple or Amazon and you get in at the right times, you can make even more, right? Like if you would have invested early into Nvidia, Amazon, or some of these other tech stocks, you could have 10, 20, 50, 100x your money over the long term. A high yield savings account would never give those returns. So again, you just want to keep your emergency fund in there and any other money you'll need for your short-term goals. Now, if you still haven't opened your high yield savings account yet and need recommendations, then check out this video where I review all the best accounts. I truly appreciate every single one of you watching. Good luck and have an incredible day.